This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. Today's Fed positioning is less hawkish than markets had expected. The US Fed's policy announcements today brought no change to their rate targets of 5.5%. They did note that ongoing inflationary pressures and tight labour markets had stalled progress towards bringing inflation back to its 2% target range in 2024. But they won't shift their rate signals until they actually see progress. In addition, they said they will slow their quantitative tightening activities starting from the 1st of June. That means they will reduce their balance sheet by only $25 billion per month from the previous $60 billion per month. In remarks after the policy announcement, Fed boss Powell said their next move is unlikely to be a rate hike. Equity markets like that, yields fell and the greenback eased, but part of the lack of action could be its desire not to make large policy moves in an election year. Meanwhile, the widely watched ISM factory PMI slipped back into contraction in April, just marginally weaker than the market version. The ISM version is usually lower than the market one, but both generally move in the same direction. Currently, that is a softening. That came as the US JOLTS job openings report declined by 325,000 from the previous month to 8.488 million in March, so really only a very small change. But markets noticed the slowdown. But the ADP employment report beat estimates by rising 192,000 in payrolls in April, and that was more than expected from the 175,000 increase, but less than the March gain of 208,000. Hiring was broad-based, they found. All this comes ahead of Saturday's US non-farm payrolls report, which is expected to record a solid employment force gain of 243,000. Because of the widespread May Day holidays around the world yesterday, there is little other international data released overnight. In Australia, though, their statistics agency released employee living cost indexes, separate from their consumers' price index. In March, their CPI came in at 3.6%, but their employee living cost index came in at 6.5%, mainly because of the sharp rise in their variable mortgage rates, which passed through very quickly. It was notable that the other groups, especially retirees, did not suffer much of a variation from the CPI in their own LCIs. The US Treasury 10-year yield is now at 4.61% and down 7 basis points from yesterday. Wall Street has risen 1% on the S&P 500 after the Fed announcement. And the price of gold will start today up $9 from this time yesterday at $2,303 an ounce. But oil prices are down another $2 from yesterday at just under $79 a barrel in the US, while the international Brent price is now just on $83.50 a barrel and down even more. And the Kiwi dollar starts today unchanged from yesterday at just over 59 US cents. Against the Aussie, we're holding at 90.9 Australian cents. Against the euro, we're also holding at 55.3 euro cents. That all means our trade-weighted index starts today at just on 68.8 and down a mere 10 basis points from yesterday. And the Bitcoin price starts today at $57,694 and down another 4.3% from yesterday. And this is a new 2-month low. Volatility over the past 24 hours has remained very high at just on plus or minus 3.9%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.